Can a recession and inflation coexist? We saw that in the 30s Great Depression and the 70s Great Inflation. Today, the job numbers is trending lower, indicating a possible recession, while the inflation numbers are ticking up. When these two conditions occur simultaneously, it is known as stagflation. The 70s Great Inflation and today's situation is pretty similar. We will study them and discuss how to manage stagflation. My name is Kon Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Inflation and interest rate were at the high in 1975. Today, we're observing a very similar behavior with the 70s. During the 70s, there was a period of 2% inflation. Suddenly, it started surging, then it peaked, and later it retraced downward. The Fed cut interest rate. When most thought that inflation is under control, it started surging to a new record high. Does it sound familiar? Inflation peaked at 9% during the US post-COVID in 2022. Then now it retraced downwards. Today we are like in the 1973 moments that indicated here in red. Subsequently, inflation formed another peak in 1975. Let's take a look at the job numbers in 1975. We are seeing that in recent months, we could see that the job creation has been trending lower after the post-COVID. May and June numbers revision downwards were staggering. Instead of a 10 plus percentage point kind of revision, it was more than 80% downward revision. And from supposedly 144,000 jobs created that month, it was revised downward just to about 19,000 jobs created. How about the job numbers in 1975 when inflation was at a peak? Let me just squeeze in a little bit here in 1975. Let's get to 1975. And that was a 1975, it was here. And we could see that it's pretty similar. The job creation was trending lower when inflation peaked in 1975. And that was also a period around here that in December 1974, the job created was at its lowest point. And how about the stock market? How did it perform in 1975? In the 70s, it was very volatile. Where was 1975? It was about here. And before that, we could see that market was pretty volatile a few years before 1975 or the 70s Great Inflation. So it was very volatile. Before that, we could see a nice trendy market. But as inflation builds up, market became very volatile. And as shared in my July tutorial, and we're seeing that the market, I'm expecting market to be very volatile moving forward. Great trading range if for those traders are trading. But for investor, we have to take a very cautious mode about how we're going to invest in the stock market. And during the stagflation, my favorite hedge assets is the commodities. For example, the silver has risen to nearing $7 from $1 plus region. Inflation did continue into the 70s, into the late 70s, and that's what we saw in 1979. My plan in managing stagflation is to keep my debt low and having more cash to invest in inflationary hedge assets. At the same time, keeping my creativity growing, creating more business, more work, that also means more income, and that's how I can derive more cash. And that's what we are seeing that in many great companies today, they are doing exactly that. Deleveraging, holding quite a bit of cash reserve, but never stop innovation. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.